Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro, well, it moved up slightly. It's kind of edged back. We've actually, in our Asian analysis, we talked about this being boxed in between 1360 and potentially lower at 1286. But it's been a relatively quiet night, although we did see Trump indicating substantial progress between him and the China talks and gave a little bit of a move here in the Aussie dollar. Let's see this push here, but nothing, nothing, huge that you would think of, but certainly has given it that bid and also has impacted the Aussie Yen itself also. It's been it's also going to be a very light calendar for today. As we come into today, we're looking at U.S. wholesale inventories at 10 a.m. Eastern, but we do have Dallas Fed manufacturing at 10:30 a.m. Eastern. But a relatively light calendar to start with. I know the rest of the week is going to be quite a few notable reports, but at least for today, it's going to be relatively quiet on the economic calendar. Kill pushing just a little bit higher here, and we've also seen gold just kind of holding its own here after that slight dip. Concerns here is also with the cash dollar index here. We may try and ease back. I think we're going to eventually make it down towards that pivot around 96.08. I believe, like I said, we'll see. But obviously got, as we said in the analysis, a lot of cross currents here with if it isn't euro weakness or the China talks or the S&P, which continues to hold up quite favorably up here at these upper levels. There's an area that we're looking here that's very, very close here. We'll check on that a little bit later in relation to the dollar yen. And the dollar yen itself has eased back just a bit in here, but it's kind of like in a no man's land. There's really not getting any traction whatsoever here. And just only 2 news stories, actually 3, but it'll be fairly light, and then we'll get right into the analysis. So in the morning bid, Desert yields no deal for the UK's May. British Prime Minister Theresa May has another chance to lobby fellow EU leaders on the margins of the EU Arab Summit in Sharm el-Sheikh today, but there are precious few signs of them changing their position. Already at the weekend, she chose to postpone any fresh parliament vote on a deal Brexit to March 12th latest. That means that the main action this week will likely be an attempt by lawmakers on Wednesday to force the government to seek a delay to Brexit in the event of a no deal. That's seen as destroying May's strategy of presenting Parliament with a last-minute choice between her deal and a chaotic no-deal Brexit. The proposed cross-party amendment gained momentum at the weekend as the 3 government ministers spoke in favor of it, and May confirmed there would be no sackings for any ministers who support it. Separately, the detections of Labour's MP from the party last week was indirectly stepped up pressure on leader Jeremy Corbyn to more proactively back the second referendum that will become a possibility in the event of a delay. Deputy Leader Tom Watson yesterday suggested he could even join a mass rally in favor of the so-called People's Vote. Set for March 23rd, it's worth pointing out, however, that even the government is forced into delaying Brexit, it could still choose a postponement of only a few weeks, which would still be too tight a timetable for any new referendum. Italy's bonds have got a boost this morning after credit ratings agency Fitch late on Friday reaffirmed its rating at BBB despite reeling off a list of negatives ranging from high debt, a weak banking sector, and political uncertainties. Still, the market has concluded it could have been worse. And going through the markets, the prospect of a deadline delays on both the Sino-US trade talks and Brexit is consuming markets first thing Monday. Shanghai stocks surged more than 5% in their biggest one-day rise in almost 4 years after President Trump agreed to postpone planned tariff rises on Chinese goods from March the 1st, citing significant progress in trade talks between the world's 2 biggest economies. The rest of the Asian bourses, the U.S. and European stock futures, were also higher, but by far more modest points, almost 0.5% or less. There was less price drama after the weekend indications that Britain may be headed for a delay in the March 29 deadline, with press reports surrounding the weekend European, Middle East, in Egypt, and a possible delay of Brexit from 2 months to 2 years. Also, reporting the Guardian newspaper said that the EU was considering a postponement for as much as 21 months, at least partly because it would obviate the need for controversial Irish backstop that prevented agreement on the negotiated deal in the UK Parliament. With many in the market already assuming a delay of some sort was likely, sterling's gains against the dollar and the euro were modest. On the European corporate front, German chemical firm Covestro is expected to fall 3% after announcing 2019 EBITDA could drop as little as half of the year's value. And as you can see, there's hardly anything here as far as economic events. And just two more stories. And fairly quiet, like I said, in FX. Yuan hit 7-month high, and Aussie gains after Trump delays tariffs. China's yuan touched a 7-month high, and commodity-linked currencies like the Australian and New Zealand dollar gained on Monday after President Trump confirmed he would delay a planned hike in tariffs on Chinese imports. Trump said on Sunday he would push back the March 1st deadline as talks between Washington and Beijing to end their months-long trade war made substantial progress. Chinese equity surged as investors piled into the riskier assets. There was a huge risk premium in the renminbi that was being priced out, said Esther Reichelt. And news of the postponement was not much of a surprise, as the market had already been factoring in reduced China-U.S. trade tensions. The Australian dollar, seen as a proxy for China risk because of Australia's dependence on Chinese demand for its exports, rose 0.4 to 71.60. New Zealand dollar from 0.4 to 68.68. Shinichiro Kadoda, senior FX strategist at Barclays, said he expected the market forces would shift back to global economic fundamentals. Concerns about economic growth from China and global growth have weighed on investors' sentiment in recent months, as a huge rally in risk assets after the Fed pressed pause on its interest rate cycle. Sterling at 0.3 to 30.92 as the traders digested news that the British government was considering how to proceed with Brexit. And lastly, we'll just take a quick look at gold. Gold gains as dollar sags. Trump said on Sunday he would delay an increase in tariffs. Spot gold rose 0.2 to 13.30. Trump's extension of the tariff deadline has weakened the dollar, driving gold up, said Jeffrey Halley, senior analyst at Oanda. Gold, as it moves into the European and New York trade sessions, might come under pressure from the stock market, Halley said, and that there won't be any sustained downward pressure until there's more information on the trade deal. Asian shares scaled a 5-month peak after Trump's decision to extend the deadline improved appetite. Gold prices, though, hinting for a looming bearish correction on the risk on market sentiments, will remain firmly supported on the rising economic uncertainties. So with that, let's just go on and move into the analysis. I'll start off here with the euro. So it says the euro retains its sell mode, requiring a daily close above 1360 for further upside. Currently, the pair is lacking momentum for either bulls or bears. Technically, the market is boxed in between 1286 and 1360. And essentially, you can see that's exactly right where we failed here, or we eased back here, is right here at 1360. Made it to what, 1359, and we just kind of rotated a little bit lower. We'll take a look here on the daily. So that's what I was referring to, this 1360 and 1286 as the market is boxed in. Now, after suddenly, putting in a hammer bottom, and we had talked previously on the prior week about the disparity between the exponential moving averages, we've kind of eased back from this oversold, but nonetheless, you can see here for the last 3 days, you can see this action here where those prior 3 days had finished lower, but only slightly lower. And if you look here, the low had been tested a little bit lower. We're basically just stuck in neutral here with the euro. Obviously, weaker PMIs, weaker economic data, weaker data coming out of Germany also have, not allowed the euro to maybe reach its potential of working off this oversold market. As I mentioned, last time we had this this big gap in the exponential moving average, we saw one heck of a fallback here. And we talked about we didn't expect that, but I tell you what, I thought I would expect a little bit more, maybe closer towards maybe 1392. So the euro has its own struggles here. And I think a lot of it's going to depend on what happens with the dollar. But for the most part, it's just basically stuck in the mud in neutral. If we can get it back up above here, for right now, we're keeping it pretty simple. If we are able to push higher, and certainly that's a tough row to hoe at this point, but if we do and we trigger some stops, I really, going back to the same resistance we had before, that resistance is going to come in right there at 1389. I think we trigger past this, and I think some people will probably use it as an opportunity, may even start to, as much as we've put in right here, may start to try and use that as an opportunity, already trying to get some shorts at a more valued area. I think eventually we could push up here towards this 1406 if we break higher. But for starters today, as it was the last time, we're going to have a resistance here at 1389 here. Support on the downside. As I mentioned, we're boxed in at 1360 down here at 1286. And right in here. And the support right now is going to come in just like it was. Really no changes from Friday. And that's to be expected considering we're not going anywhere here. But if we do push higher past here, I think we'll trigger some stops and try and not really find any real trouble until we get here to 1389. So support on the lower side is going to be the same also. It's going to be 1312. So no changes here on the euro here. Moving on to the cable. Okay, cable has already rebounded from last week's test of the 50% back, confluencing with 2787. Immediate test is the daily close resistance of 3062, which has thwarted the market for the last 4 trading days. Pullback support is 2935 on the 2-hour. Resistance is 3137. Confluence with the 3123, which is a 78%. So we'll go and take a look at this and get a little bit closer look in reference to this. So just to go on and recount once again, or re-go over it, it says cables rebounded from last week's test of the 50% back. And there's that 50% back, okay? And confluence in here with the 2787. The 50% back was the 2796, but the level here that we're looking at, 2787. I think on one of those days, on this day, I think our bias chart support was 2774. So very, very, very close as we hit that there. And we saw a nice rebound. We broke this little downtrend line, really opened the door for us to move much higher. It says immediate daily close resistance is the 3062, and that's where we've been. This has capped this market here, which has thwarted the market the last 4 trading days, and we've had a tough time trying to go and get back here. Here's the 3062. You can see, although they've pushed above it, they have not been able to close above this 3062. Well, we're just slightly above it at this point. It says pullback support is going to be 2935. If we were to go on and pull back a decent amount, and resistance is going to be 3137 if we can push back up in here. So we'll take a little bit closer look on the 2-hour. So this is what we're referring to Resistance is going to be here at 31.37. Confluence with 31.23, the 78% right here. We made a quick lunge up here to 31. We're kind of pairing back. Obviously, like I said, there's once again another key week for cable. If we can push up, and we know that cable really likes the 78%. I think there's a chance maybe if we goose some stops, we'll make it up here. But it's going to be 31.37. At least for today, we'll go with the 31.23. And the thoughts that if we do get a dollar pullback, we may just go and come up here and tag this. I think ultimately we'll make at least a run up here to 31.37. But for today, it's going to go with 31.23. If we see a dollar pullback a little bit later on in the U.S. session, we can make this run up here. So it's going to be 31.23. Now, if we did get a pullback, we're referencing here at this 29.35. That's if we got a pretty good pullback. At this point, obviously, that's gonna be a little bit more further out in the week if we do go and see that. At least for today, it's going to be right there, 29.95. 29.95 here. If we do see that pullback, a more sustained pullback here, before we see some real support start to step in. There is some here at 30.17. But I think that if we do challenge it, we hit some stops, that could easily take us down to about 29.95. Well, you can see here the Aussie got a nice little lift here in regards to Trump's tweet about substantial progress and the delay of putting on those additional tariffs come March 1st. We'll take a look at what we stand here on the analysis to start the week. Says the Aussie dollar has been able to sustain a move above the key level 72.33. The exponential moving averages, as far as momentum, has shifted to the sell mode in accord with statements from the RBA. Market likely bidding its time until a resolution with the U.S.-China trade talks before a further move lower. So as I said, we did get some comments that they're not going to go on in, that Trump had indicated substantial progress and that he would not be, imposing those additional tariffs on March the 1st, which certainly got the Aussie on the bid. Initial support is 70.27 with resistance at 72.03. On the positive news trade talk, the upside challenges would be 72.74 and 73.29. Well, let's take a look where we are. Well, I'll tell you what, we're a long ways away from that. But they haven't made a real breakthrough. He's just saying we're making substantial progress. We're not going to do the further tariffs on March the 1st, but that still hasn't got us in, to make any significant moves. It's not like they've announced a deal, and those would come in, like I said, the 72.03, and then obviously 72.33, but 72.03 for starters. Well, let's take a look where we stand here on the 2-hour chart. We may get an additional little push here as we roll into the New York session. I'm not sure how much, and we talked about 72.33 with our initial resistance here at 72.03. That's that challenge up here after the employment data. I'm not so sure would even make that run here. We're going to go right here with resistance right there, which is going to be 71.86, coming right across here. Right there, 71.86. Support, on the other hand, obviously the news was beneficial, so you're not looking for the market to turn on and come apart. But support then on a dip back, it's very close, but that would be the initial support, which would be 71.28. You can make a case a little bit lower here. We'll go right there with 71.20. 71.20. I mean, like I said, things are looking rosy for right now, but if we eventually rotate, they'll go for the 71.20. But I think the 71.86, that may be about as good as it gets here. This was the initial challenge on the after the employment report, and I think the market may have a tough time trying to get something like that now. Like I said, on the good news here coming into the U.S., they may try and push risk a little bit, and we may get a little extra boost, but I think we'll run into some trouble here around 71.86. We're going to go with 71.20 for support. Obviously still remains bearish. Dollar Swissy's over here weakening a bit in accord with what the movements in the dollar index itself as we start to slide back. And I think the good area right here is going to be right here with this 38%. And you can see the touches coming across here. Now, it's still a ways from there, but once again, like I said, I think that if we do go on to get this dollar, and we'll be looking at the dollar index, I think we may be able to eventually rotate towards that pivot, that key pivot. I think that we can come down here for 99.54. And so you don't want to get caught with your pants down. If we do quickly hit a slide and come off, and we're just rotating lower and lower, and the way this market's hanging here, I would think that the stops start to build up a little bit just under here, probably about 99.77, and we could make a quick move to 99.54. So we're going to go with 99.54 on support. Resistance looks pretty key over there at par 21. We'll see if there's anything on the 2-hour. Yep, right there. So just call it par 21. It still remains bullish. We'd have to break lower here before we can say this thing is straight up bearish. And let's go move into the dollar CAD. Says the dollar Canadian closed the week below support level 31.52. Certainly the Canadian has benefited from the relentless rise of cruise, but along the way it has ignored Bank of Canada comments suggesting further strength. It will take suggesting further strength, that is for the Canadian dollar itself, despite what the Stephen Polos has said, hey, there's no rush to do anything. Look, the Canadian dollar continues to just chug along. It will take a strong pullback in crude to balance out this recent drop. Initial target is 30.43 with the potential to 29.02. Initial resistance 32.35 with the strong daily close resistance at 33.09. So let's go and take a look at the dollar CAD here. Well, here's what I'm talking about here. We closed the week below this support here at 31.52, and that's key support. And you remember about a couple of weeks ago, it looked like we could easily make it here to 33.54. Remember, I think it was 33.56 was a 50% of this move, and looked like we may make this move to 34.18. We'd come from, remember, this was key weekly support here. Remember, that was the 30.89 the market held, and we kind of meandered for a couple of days in here, and then we really shot off, and we took off, and it looked like potentially we could make it back up here to 34 with this 33. Remember, we talked about that. We said, okay, we're going to get this will be a good area to take a pause. 33.54, I think it was confluence with 33.56 to 50%. I thought, okay, if you can get this area right here, we'll see a pullback, probably, towards maybe 33 even, and then maybe a challenge up in here. Well, heck, we didn't even quite make it here because I know I was licking my chops with an offer up here, and we came up short. I mean, we came close, but I thought for sure, okay, we're going to tag it up and then start to roll back, and then from there, it's been south of the border. Obviously, the rise in crude oil certainly had its impact, but like I said, along the way, they even ignored the comments of Stephen Polos, and we just continued to strengthen here, and we saw Friday's move, and then that just engulfed the we were already lower to start with, and look at this. We engulfed the prior day and even closed below 31.52. So the next target is actually here, 30.43. Now it looks like that's still a long ways away from here, but with a potential down to 29.02. Because like I said, look at this rally. This rally was truly feeble, and not only was the rally feeble, look at here, you're just going down, 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 down. Now you get one update, and then it totally engulfs that one update and closes below support. So the target down here is going to be, what you're going to be looking for is 30.43. Potentially you can get down here to 29.02. It will take, as I mentioned, a pretty good pullback in crude. Not the saying we couldn't get it, but if we do get a pullback in crude, it'd take a pretty good pullback to allow us to come back up in here. Now we said if we did get that pullback, our resistance would come here right there. You can see it there, 32.35. That's what we're looking for if we get a pullback. That'd be your first area of resistance. Well, obviously with it being on the weak side, and you can see how long this has been on a sell mode here on the exponential moving averages, it certainly looks like it wants to rotate lower before we can balance this thing out. So let's take a look here on the 2-hour. And this looks pretty sickly at this point. Initial resistance is going to come in right there. 3183. That'll be initial resistance. We'll just mark that off. Support comes in right there at 3080. Remember, 3089 was that huge weekly support at the time and held the market very well at the time. This is huge weekly support. But we'll go with 3080 in case this market slides back. With the risk on from the China talks, we might see even crude try and push even a little bit higher than it already is, which is up in the stratosphere. But we'll be looking for 3080. And with that, we'll move into the dollar peso. Well, technically speaking, this has played out very well. I haven't done very much with it. Like I said, I'm still trying to get a good handle, although I've hit some good areas as far as targets where I thought the market would pare back or go to, and which was on this 1946. And then my next target was 1911. And I thought we'd get there, and doggone if we didn't get there. So let's go in and let's take a look at where we stand here on this dollar peso. It says the dollar peso has reached 1911 target level, confluence with 1911, the 61% of 1888 to 1947. One of the reasons, like I said, I always say, it seems like my analysis is pretty simple, and like simple as far as not a whole lot of jazz to it, but I go with the touches. And with the touches, you see where the volume is, and I look for confluences with the fib, and then I try and look at how the market is sizing itself up, how it fails, or if there's a potential for a continued break lower, and of course factor in a little bit of the EMAs, although we're looking at it here on a 2-hour. So the take here was. Let me see here. Anyway, it said target level, confluence of 1911, the 61%. You can see this of this move of 1888 to 1947, discussed earlier in the week on the daily webinar, because we thought we would make it down here. Actually got here a little bit faster than what I would have thought. Okay. And actually, I was trying to pick it up at the time. I thought we were going to break down here on Friday. I thought we'd get down to like about maybe 1909-ish, and then I'd like that area to bounce up, but we didn't quite make it to the 1909. But it says here is the 2-hour volume band of 19059 to 1911. So I like this little volume band in here. And what I was saying was, I've indicated here, we should find bids on the dips back to 50% of this area. And so what I'm looking at here is really 50%, about halfway back in this band. Right here, you see all this volume coming in. I think with any moves down here to the 1909, 1908-ish area here, because of the way the market from a price structure standpoint, we've already come down here. We broke lower. but we had such a break, I think that you would have to do a little bit more testing. And that testing is into this band here, okay, where there's volume support. So it's already playing out to what I'm expecting, which is come down here with the analysis I had from yesterday. And I think that you'll see some bids coming in here right around this 1907.9, 1908. Take that dip, and this will give an opportunity for them. Anyone who would buy, they'd be looking, they're going to be forced to have their feet put to the fire. And I think down here, this would be a good opportunity for bids to come in and cover some shorts here. I'm not saying that we can't, like I said, the entire band is 1905 to 1911. And really, if this thing were really coming apart, we could make it down here to 1897. But for now, I think dips into here will be supported. So we're going to look at, say, right in here. I don't know if we'll make it all the way down there, but let's go to 1908. 1908 might be stretching just a little bit, but we'll go with 1908 for support. Let's call it this. There we go. Resistance. We're going to go right there for right now. 1912.7. 1912.7 for resistance. But this is playing out pretty good. I was looking for that breakdown here, although it got here a little bit faster than I thought. 1911, that pretty much hit the nail on the head. Actually, like I said, I was trying to pick it up on Friday. I was really getting chinchy, so I was trying to pick it up at 1909-ish and didn't quite get there. I thought we'd see a bounce from there, and certainly we got a bounce, good little bounce. But my thought was, like I said, coming into Asia on Sunday was we're going to have to come down here, and we're going to have to come down into the middle of the band. And there's a band in here. You can see here we could even violate the 8 right there, but 1907.7. But it makes sense that we'd have to come down here. And then I've always found that when you're looking at a band here, although it's not like a huge band, you can even push this even further out, actually, which would take it closer to the 1906. But generally, you go 50 back in the band, and then you find some nice support. And I think that right now we've come off so much that from a technical standpoint, if you were short, you'd want to be looking to have some bids down here, about 50 back into the band. But you're coming around 1908, 1908.77. Let's go and take a look at crude. I hadn't done much with the crude. Although we had that 57.05. Now there's that, actually it's 57.18, which we had as our resistance. Not resistance so much as it was a target that we're going for, 57.18. They've already hit it. They keep kind of failing here. Here's an interesting thought, is that with the risk-on rally and the good China news, you probably would have expected this to goose some stops, which probably may indicate we couldn't even take out Friday's high on this good, great China news. And so I'm thinking is we've probably gone about, as far as we can go. We'll take a look at the 2 hour, but I'm still going to keep on sticking to this 57. I think we had it 57.18. Maybe put it at 05, but I think we've had it 57.18. Yeah, I'm not going to change anything. That's going to stay the same here, 57.18. And once again, you would have thought that with this good China news, they would have really just jumped up here, and we're not doing it. We're just kind of holding our own up in here. So I'm going to stay with the 57.18 and support. You got to be careful with this thing because we do start to unwind. Support's going to be 56.20. Be careful with this one here. And we'll move into the dollar yen. So it says the dollar yen is marking time while the S&P 500 advances towards 2807, the 78% of 2314 to 2942. Weekly close resistance for the pair is 1092. This will be key if the market takes out stops during the week above 1103 to challenge 1144. 2-hour resistance. Weekly support is 1046, followed by the 2-hour support at 1024. So once again, we're referencing here with the S&P 500 makes a move towards 2807. We'll actually take a look at that quickly. And we're mentioning here that the weekly resistance is 1092, which is key if we take out these stops. Well, it certainly doesn't look like it's the case right now, but let's take a look here. I don't know if we have it on this one. Let me take a look here. Yeah, we do. So it looks like we're trying to make a beeline over here to this 2807, the 78%. There's also some additional resistance just above there. Comes in at 2813, but really this whole area here, 2807, 2813-ish. And you look here, pretty good little level there too, just above right there. Let's mark this off here. You can see that right there. It's 2811-ish, 2813. Right there. You see that? Almost 2815. And 2807 is at 78%. If they're going to stall out, this is going to be the area. And really good, strong area here. You look at that. You see here? It's been key. Maybe we try and make that extra little push here in the morning in the U.S. session, and maybe it exhausts itself or starts to run out of gas maybe mid to late U.S. When I say mid to late, I mean mid to late morning U.S. session. So it'll be interesting to keep an eye on this, okay? And maybe once we get up in here, maybe from there, it doesn't mean the market just turns around and goes south of the border, but we start to turn maybe over the next day or two. Then we start to rotate a little bit lower. But it's a good area here. 2807 is a 78%. And you can see right up here, 28.13, 28.14, right there. Very key, something you want to go and keep your eyes on throughout the session. Really into the next couple of days to see if maybe we come up here and we just kind of, hang around for a day and a half or so, and then we just start to rotate lower. Well, getting back to the dollar yen, see right there, 1092. That's key weekly resistance. Now, as I mentioned, we're just simply marking time here in the dollar yen, and we're going nowhere fast. You would think with the S&Ps rallying, you would think we should probably be, realistically, if you look where the S&Ps are, and remember Kuroda was talking about if they have to, they'll ease, we should be closer to around 1187, if you think about it, considering where the S&Ps are. Should be up in here. You see that? If the S&Ps are 78%, this dollar yen should be up here closer to 1187. Now, the one way to look at it is that we're just, in a sense, negatively diverging, because if you're looking where the S&Ps are, and still, although the dollar's paired back, the dollar's still way up here. You would think that, we'd be, like challenging 1187, probably would have already taken out 1136. So it's really been a bit of a feeble move up in here. So we take a look at it on the 2-hour chart. Boy, we really look like we're not making any movement at all whatsoever. For right now, if you want to know, as I mentioned, I guess on a short-term basis on the 2-hour, 1103 is where you really break out. Okay, you can really start to make that move. It's going to be, for right now, be the 1095. Support we mentioned was 1046. And we've got 1025, that 2-hour support coming in here. Oh, actually, there it is. There's 1046. So from the short haul, we're going to stick with that, 1046. Got 1047 marked off. That's just fine right here. Now we're going to go and move into the Aussie Yen. Now this one we're actually going to, I'm going to go and track this one basically on a 30-minute, because the way this market moves, I think it's, depending on the way you're trading it, and it can be a little bit volatile, although it hasn't been lately. I think it makes it tough to go and look at it on a 2-hour chart. So I put on here the Aussie Yen, the 30-minute was rejected at the pivot of 79.10. Exponential moving averages remain in buy mode, but are rolling over. Support is 78.69 with resistance at the pivot. Well, we're above the pivot. There's no doubt about that right now. You can see here's that pivot we talked about, 79.10. And so, a moment. There we go. So the way I choose to look at this Aussie dollar, although I always look at it on the 30-minute, I look at 2-hour and 30-minute. But because of the way this market trades, I just don't feel like I get anything out of the looking at a 2-hour. And I think you have to focus on the 30-minute. And don't forget, I like to use the 30-minute for my exponential moving average. So as I was saying, it's still on a buy mode. Now it's starting to kind of roll over a little bit, but you can see we've made this move up in here. We may be able to push it a little bit higher in the U.S. session. Maybe we'll see if we can push up the S&Ps above the 78%. Remember the S&Ps, the 78%, and then we also have some additional, moment like this. There we go. 2807 is a 78% on the S&Ps, and 2814 is key level. Maybe we'll be able to push this up a little bit higher. Okay, here's that big challenge. I'm not so sure we'll make it all the way up to there, but resistance, got some nice volume resistance coming in at 79.40-ish. Let's go right there and split the difference and call it 79.44. 79.44, we'll mark this off. Right there. I'm not saying necessarily it'll make it there, but that's going to be like the risk level right there. 79.44. And this got to be marked a bit bullish because of the EMAs. Support? Well, we are above that pivot right now. If we were to rotate around, I don't think we're going to do that today. Support would come in right there at 78.93 on a short-term basis. 78.93. We may not see any real big movement until we get into the U.S. session, so they have a chance to react to the China news once we get cash equities open. So you may want to just keep your ammo ready. So since the dollar index is a bit of a conundrum with multiple cross currents affecting it, the euro weakness, U.S. yields, S&P 500, the China talks, and also the least dirty shirt in the hamper. The 2-hour has a shooting star and a feeble rally. A test to the pivot of 96.08 appears in the technical cards. Market would need 2 consecutive 2-hour closes above 96.92 to reestablish the upside momentum. So let's go and take a look at the dollar index on the 2-hour chart, which is what I was referencing here. And you can see we got a little bit of a shooting star here. And generally, you don't look for a shooting star until after a rally. Although, once again, that's what I was stating. This is a feeble rally. It did try and come off these lows, and it was feeble. So it does indicate a push lower. We have a little bit of a channel in here, and this happens to coincide right down here to this pivot. And the only reason I marked it in here because it looks like I said, that we just want to rotate lower here, and this makes the most sense of where they're going to want to draw themselves to. You remember the importance of the 96.08. Remember this? And we just languished there for just a few days here, and the importance of this, once we got above it, we were able to start making a move lower. I think this is almost going to work like a magnet when you look at it and indicate that that's probably where we want to go to. Okay, so we're looking in here. There's some initial support here at 96.24. But we've already made this dip to 30. So I think that to be prepared, okay? There might be a little bit of support just below this, but I want to go with this 96.08. At least we know, just like we're talking about the Aussie Yen, just so you know where your risk level is. And I'm thinking that eventually, if we're going to break lower, and this is look at this fall here. And that's what's talking about technical structure. We talked about that with the Canadian dollar. Look at this. We broke out to these new highs. Okay, maybe we're overdone. We stretch back here. We come back, maybe we're going to rally, and look at this pullback. Wow. And then you're thinking, okay, now we got overdone. People got caught, got stuck. We've taken a dip. Now we'll probably make a rally, maybe closer up to here. Now, remember, we had 82 in our sights before. We came up just about a couple of 3 pips short. But once again, you would expect a little bit more than that. And look, to finish like this, it really opened the door for them to test lower. So if we do break lower and the market feels like it's tired and maybe we've stretched things as good as they can, at least for a short haul, I think we could make that move down here to 96.08. So we're going to mark that pivot as our bias chart support. Resistance, where we said we need 2 consecutive 2-hour closes above 96.92 to turn things around. As far as resistance, it's going to be right there, 96.70. Let's see, almost, yeah, right there. We'll call it 96.70 for resistance. And let's go move into gold. Okay, it says gold has a gravestone doji at the 1341 level. The shiny metal has been unwilling to let buyers come in at a value level. Therefore, stops on the downside could be relatively tight. Support comes in at 1314, followed by a potential stop loss run to 1292. Resistance is 1341. The market is still capable of an upside stretch to 1358 on an equity pullback. Well, it could get interesting for gold. I'm moving here. Well, you can see here, and it's not much of a gravestone doji, but you can see here we made this run up here to 1341, and here's this upper area, 1358. This is a little bit tricky because the dollar is easing back. A matter of fact, when we referenced even in the news, it was saying, hey, look, it goes a little bit higher on the dollar sagging. So it's a little bit of a tug and pull, but here's the issue that I was talking about. You remember on the way up, we're looking, okay, in case they pull back to 1267, man, they made this run up here to 1304. Well, right before we got there, that's where we moved our target area to 1323. We pulled back a little bit, but as I said, gold has not allowed a pullback where people could say, wow, this is a good value area. I'm happy to step in. We talked about this down here when we thought, hey, look, they may eventually make it down in the upper 1250s, but you're going to see some good buying here at 1267 to bounce back. You just haven't seen these pullbacks to allow people to come in and accumulate some positions to hang on. Okay, and that's been the problem. So we did back up 1323. Well, 1304, that was a good area to rotate to initially, but would that have been a good area to say, you know, I'm going to load up the boat or pick up some pretty good contracts there? No, you would have seen a break lower here and said, okay, I'll take my chance here at 1280. So once again, we make another run up in here. So we pull back, but not a lot. So the support initially is going to be the 1314, but I think you could eventually see a breakdown here at 1292 if, once again, these tight stops get hit for a pretty good little ding. So looking here on the 2-hour chart, there's right here. You see this coming across 1315? We'll call it 1314 for support. And actually, let's see, right in. Yeah, so we'll go with 1314 on the support. Now, what was his name? I think it was Jeffrey Halley, whatever, and just said, hey, look, there might be some may have some difficulty as we come into the U.S. session with the strengthening S&Ps. So once again, that's what I'm saying is, if we make this move up and higher here in the S&Ps, towards this 2807, which is a 78%, certainly looks like it wants to make a move here, and 2814, that may kick the stool out, or kick one of the legs out on the stool for gold. So you just want to be aware that we're kind of hanging around here in this gold market. If the S&Ps continue to move higher, and you can see we don't have much, you can go on and rotate lower and have this thing fall back on the S&Ps making new highs, and then eventually days later when the S&Ps pull back, then we try to come back. So we're going to keep it pretty simple. Resistance is going to be right here at 1333. But be wary of these tight stops. Moving on to the bunds. Well, we did get some good news out of Italy. I guess the good news, it really wasn't good news. It was Fitch gave them BBB rating, but they reaffirmed the BBB, but they talked about poor banking sector, political woes, and one thing after another. But the thought was, well, it could have been worse. Resistance is going to be right here at 66.34, and support is going to be 65.87. And I'm not sure what's going on here, because when I plug in the, let's say, well, actually I had 66.33. So I plug this in. You see there, but as soon as I hit enter, it disappears. So when we get ready to print this, I'll go in and have it right there so it'll show up. Moving on to the DAX. Well, we may get a little bit of an extra boost with the S&Ps. And this DAX so far has been up, and away. I'm going to go with resistance right here. You know what? We've already pretty much tagged it right there. I don't trust this. We're going to go with 11,567 on if the S&Ps get scooting a little bit higher, 11,567. And support is going to come in right there. 11. I'm going to run in here. 11,414. 11,414. And we'll mark this off. Remember, there you go. So there's the bias chart. We'll get that posted in the room. And thanks for joining us here on the European Crossover webinar.